Welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the financial services sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The financial services sector, not to be confused with finance sector, of Indian share market comprises of market infrastructure companies like stock exchanges, depositories, mutual fund transfer agencies, and energy trading platforms. They provide platforms for trading, clearing, settlement, and record keeping, ensuring the smooth functioning of India's capital and commodity markets. These businesses are asset light, technology driven, and enjoy quasi monopolistic positions in their respective domains. The key growth drivers for this sector includes rising retail participation, mutual fund growth, financialization of savings, commodity and energy market expansion, regulatory support, and digitalization. The government supports this sector with policies like regulatory oversight, market reforms, energy market deregulation, ease of demat accounts, and promotion of mutual fund Sahi Hai campaign. The major challenges for the sector includes regulatory risks, technological disruption, concentration risk, competition risks, fee compression, and dependence on capital markets health. So that's a summary of the sector. Now let's try to identify trends in this sector by using two graphs, yearly returns graph and monthly returns graph. I have analyzed the share price movement of last 10 years of top 6 companies of this sector and created these graphs based on that data. I have included only top 6 because this sector has only 6 companies. And these are 3 large cap and 3 mid cap companies. So let's look at the first graph, which is the yearly returns graph. So this is it. The green bars in this graph shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line at the bottom shows the cumulative returns. The green lines over here shows number of months with positive returns, whereas the red line shows number of months with negative returns. So let's start with 2015. In 2015, the sector gave minimalistic returns of 10% with 7 negative months and 5 positive months. In 2016, the returns improved considerably and the sector managed to give 36.89% returns with 7 positive months and 5 negative months. But in 2017 and 2018, the sector gave negative returns. In 2017, it gave minus 6.45% with 6 positive and 6 negative months. And in 2018, minus 21.61% with 8 negative months and 4 positive months. In 2019, the sector gave negligible returns of 5.14% with 8 negative and 4 positive months. But in 2020, this sector gave very good returns of 69.08% with 9 positive months and 3 negative months. And in 2021, this sector skyrocketed and gave returns of 122.50% with 11 out of 12 months giving positive returns and only single month giving negative returns. But in 2022, this sector gave negative returns of minus 19.60% with 9 negative months and 3 positive months. But the situation turned on its head in 2023 and the sector's returns skyrocketed again with 82.26% with 8 positive months and 4 negative months. 2024 was even better than 2023 with 105.70% returns, 10 positive months and only 2 negative months. So quite impressive performance in last 4-5 years. Let's see the cumulative returns and follow this orange line. And in last 10 years, the cumulative return is 1216.74%, which is more than 13x. So extremely good returns, 13x in last 10 years. Now let's see the key takeaways of this graph. Cumulative return 16.74%, which is more than 13x. CAGR of 29.40%, very good CAGR, very good number uh, uh, for for the last 10 years. Net negative yearly returns three times. So in 2017, 18, and 22, 3 years where the sector gave net negative yearly returns. So not a very good number, just an average number. I would say there are quite a few sectors which have given uh, three net negative yearly returns in last 10 years. Best year was 2021 with 122.50% returns, and the worst year was 2018 with minus 21.61% returns. Positive to negative year ratio is 2.33 is to 1, which is an average number, not the best, not the worst, not too good, not too bad. Let's move on to the monthly returns graph. This is the monthly returns graph, and the red bars in this graph shows negative mean monthly returns, whereas the green bar shows the positive mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. So let's start with January. January is a flat month for the sector with average monthly returns of minus 0.93%, 7 negative years and 3 positive years. February, an average month with 1.43% returns, again 7 negative years and 3 positive years. March, another flat month for this sector with negative 0.74% returns, 5 positive years and 5 negative years. Then April, a very good month for the sector with 5.78% returns, 8 positive years and 2 negative years. May, an above average month with 3.07% returns, 6 positive years and 4 negative years. June, a flat month for this sector with 0.44% returns, 6 positive and 4 negative years. And July is the best month by far for this sector with 8.84% returns. 9 out of 10 times the sector has given positive returns in the month of July. August, another flat month with 0.45% returns, 5 positive years and 5 negative years. September, another strong month with 5.15% returns, 6 positive years and 4 negative years. October, an average month, 2.34% returns, 6 positive years and 4 negative years. November, similar to October, is another average month with 2.53% returns, 5 positive and 5 negative years. And so is December. Similar to October and November, 2.09% average returns, 5 positive and 5 negative years. So all in all, I would say pretty good graph. See, there is no significant bad month for this sector in the entire year. January and March are the only 2 months with net negative monthly returns, but that value is very less, even less than 1%. So this is a very good sector in terms of consistency. There are not much months where actually it gave negative returns. There are a couple of flat months though, for example, June, August. So 2 months which are also can be considered as flat months with negative average and 2 months with positive average but negligible positive. So all in all, a good impression on me from this graph. Let's see the key takeaways anyways. So the cheaper months are January and March, the 2 months with negative monthly average. The costlier months are April and July, April with 5.78 and July with 8.84% returns. And positive to negative month ratio is 1.26 is to 1. Now this is a low value. This means 1.26 positive months against each negative month in the last 10 years, that is 120 months. But we have seen several sectors which have this ratio higher than this. So this number is not very good for this sector. But all in all, I still consider this sector as a good sector because of good cumulative returns, because of good CAGR, and especially because in the entire year The worst month average on a historical trends, the average worst month is January, and that too only negative 0.93% return. So very good sector in terms of consistency and low volatility, I would say. That is all from my side in this video. Thanks for watching it, and if you have liked it, click the like button, subscribe to the channel, and share it with your family and friends. I'll be back soon with another video. Goodbye for now.